Hey, what's up, guys? Are we live? Live stream offline? But I think we are live already, right? Can you guys hear me or see me? Are we live? We should be live, right? Yeah, I have 24 people waiting, but there you go. What's up, guys? Can't see you. Yeah, there I am. Is everything good with my sound? Yes, sir. What's up, guys? Welcome back to another live stream. How are you doing today? Good. Thomas Spector, Preston Hearts, GGR Outdoors. Love your enemies. Yeah, we're live. Please drop a comment down below. Let me know what stocks you guys want me to go over. In the meantime, I will let you know. I want to make a summary of what happened today in general terms in the markets. And yeah, so we can go over the stocks that you guys usually ask about, guys. I guess that you want to know about Tessie, about Tesla, about Apple, about what else? Google, Amazon, SPY, Meta. Yeah, what happened with Meta today, right? Guys, it fell off a cliff at around noon. There wasn't any bad news that came out to justify that drop, and it ended up pretty much recovering most of the losses that it took near noon. Yeah, I don't know what happened with Meta over there. In the case of the SPY, I will kind of break it down, guys, but you know that on my Discord channel, I am calling balls and strikes throughout the whole training session. I am letting you guys know. I am actually narrating in a very detailed way the trading session. So I will go over the SPY per usual, but I mean, you guys know that I am going to be very active tomorrow, letting you guys know what to do when it comes to the SPY. So let me tell you guys what happened today. We had another red day, not across the board because the Dow Jones went up 0.17%. Russell 2000 went down 0.99%. The Nasdaq went down 0.89%, and the S&P 500 went down 0.32%. So when it comes to the sectors today, for the most part, we had a risk-off mode. So utilities, a super defensive sector, was the one that led the way today, up 1.31%. Then we have real estate goes up 0.82%. Healthcare goes up 0.45%. And consumer discretionary went up today, guys. This is not a risk-off sector. So I'm thinking that maybe Tesla was able to pull off a green day. Was that the case? Let me see. No, Tesla went down 0.17%. That implies that Amazon went up. You guys know that the two most important holdings inside consumer discretionary are Amazon and Tesla. Yes, Amazon went up today 1.84%. So if it hadn't been by Amazon, then consumer discretionary would have had a red day as well. You know that the three sectors that have been doing the heavy lifting year to date are technology, the most important sector by far from a market cap standpoint. We have also communication services which closed today in the red, 0.18%. In the case of technology, it went down today 1.45%. And the other very important sector is consumer discretionary because of Amazon and Tesla. So out of the three sectors that have done the heavy lifting year to date, we had two of them going down today. So what's the message that the markets are sending us over here? Take a look at the indices once again. we only had one index, guys, going slightly higher. The Dow Jones went up 0.17%. So if these three sectors happen to lag in tomorrow's trading session, then we are very likely to have another red day across the board. So without the seven magnificents, the markets cannot pull off a positive day, guys. So this is something to definitely think about. When it comes to the SPY, so what is going on over here? This is Amazon. This is not the SPY. I am going to point out here some areas of interest, guys. But again, you know that I am going to be narrating the training session tomorrow on my Discord channel. So I will be letting you guys know all the stuff that you need to know in order to trade the SPY. So the SPY is still in an uptrend, no doubt about it. Upward sloping 200-day moving average, upward sloping 100-day moving average. But the sellers have been making some progress over here. And why? Well, because they were able to break this 5-day moving average, this white line that you guys can see over here to the downside. However, take a look at how the buyers or the bulls of the SPY were able to find support today right at the 20-day moving average. So we can make the case, and despite the fact that the SPY closed in the red today, 0.31%, that we had some sort of decent close because the 20-day moving average was recaptured. And on top of that, this 20-day moving average, which is this pink line that you guys can see over here, this 20-day moving average happens to coincide with a previous support back from early August, and this is also a previous resistance back from early July and also back from mid-June. So this was an important spot for the markets, and the bulls managed to close the trading session above that spot. However, on the flip side, we have a downward sloping 5-day moving average, so the bulls still have some work to do over here. What are the most important levels that I am going to be keeping an eye on tomorrow, taking into account that the trading session closed today at $444.85. So let's say that we open the trading session above 444 bucks. If that were the case, I have two important spots or two important, let's say, gaps that could be potentially being filled to the upside. The first one, let me show you over here, $445.70. Where did I get this number from? This is the anchored volume weighted average price that comes from the 52-week high of the SPY. Very important level. Again, 445.70 or $445.70. Let's say that the bulls can burst above this level, and if that were the case, then we have this downward sloping 5-day moving average at around 448.70. Let's just put it that way. Those two areas that I just mentioned are levels in which we can expect a good old bear bull battle from which we could potentially see the SPY pulling back. However, it would be a very big win for the bulls, recapturing 448.70. And in, let's say, regular market conditions, if I happen to see the bulls consolidating and closing candles above 448.70-ish, I would be probably buying call options. What would be the good night Irene scenario over here? Let's say that they killed the tape overnight, just as they did last night. If we happen to see a massive gap down tomorrow, guys, put this number down on a sticky note. Put this number on a sticky note. 438.40. 438.40, $438.40. This is a previous support back from August 25th, and this is also a previous support back from July 10th. If we happen to see the SPY, let's say in some sort of a rush, pulling down to 437.40, this is a spot in which I think that we could have some sort of a bona fide bounce back up that would let us maybe take a nice day trade with the SPY with call options. So these are the most important levels that I am going to be keeping an eye on the SPY. And as I just said, don't worry about the SPY. I will be letting you guys know tomorrow the most important areas of interest that you need to keep an eye on. Okay, hi Albert, and thanks for all you do. No, not a problem. I am here to help. So I have some requests over here, Meta. Let's go ahead and take a look at Meta platforms. Okay, Meta. What is going on over here? Take a look at the drop, guys, that we saw today. Massive drop on no bad news, guys. This is crazy for real. So Meta opened the trading session at around 296 bucks. It started to go up, and right at 307 bucks, we saw a drop of $15 out of thin air, guys. Nothing happened. No bad news came out. Very weird price action over here. I actually drew some sort of bearish flag pattern over here that didn't end up being completed. And then Meta ended up closing the trading session in slight negative territory, down 0.17%. So on this 1 day, 1 minute chart, take a look at what happened. We saw a massive drop. The bulls found support at 292 bucks. They recaptured this pink line, that you guys are seeing over here, this 20-day moving average. Then they kept going higher, and they recaptured this 5-day moving average, went a bit higher than that, then they retraced, and in this retracement, they managed to find support, or to hold as support, this white line that I just told you guys about, this 5-day moving average. So this is a very positive price action, the one that we saw today in the case of Meta, from a 1 day, 1 minute chart. We don't know what happened with that massive drop that we saw at around noon. So what could be happening in the case of Meta tomorrow? If Meta can open the trading session above this 5-day moving average that I just told you guys about, and if the bulls can close candles above their area, we have two potentials gap to the upside. The first one up to 303 bucks, which is an area in which the bulls fell at in yesterday's trading session. And then we have the gap to the upside that was open today. And the bulls actually failed, as I just told you, right at 307 bucks. So these are two potential gaps to the upside that Meta could be filling tomorrow if the bulls can open above this upward sloping 5-day moving average. So let's say that we take this trade, guys. What profit are we looking at? So let's say that we buy some shares or calls of Meta at around 299 bucks. Again, closing candles above this 5-day moving average. The first gap up to 303 bucks would imply a 1% profit, and up to 307 bucks ish, this would imply a 3% profit trade. Nothing just needs that. This is a very good looking chart, guys. This is an uptrend, upward sloping 200-day moving average, upward sloping 100-day moving average, and the bulls lost as support, as I just told you, both the 20-day moving average and the 5-day moving average, but they were immediately able to recapture those moving averages, and they closed the trading session above them. So in my opinion, nothing to complain about Meta platforms. Let me take a look at the market structure of Meta, guys. So supply and demand, is it looking good or not? Let me see. So remember, on top of this chart, you guys can see the demand, and at the bottom of this chart, you guys can see the supply, so sellers. And here, we have a market structure that is starting to be a bit concerning. So this area, guys, right around 293, 298 bucks is very important. And why? Why do I say that? Because we have a rising supply that is above the demand, which is also rising, which is good. And the demand is also rising because we are seeing a major uptrend. However, as of now, from a demand and supply standpoint, sellers are outnumbering the buyers. So be very careful here. And I'm thinking that if Meta happens to break once again this 20-day moving average to the downside near 295 bucks, this could even be a short opportunity. So there you go. That's my assessment on Meta. I have over here Eli Lilly. Wow, what a monster, guys. Unbelievable. Let's go ahead and take a look at Eli Lilly. This is a monster. Um, I have nothing to say about the technical chart, guys. This is a super uptrend. We could make the case that Lilly is a bit far away from home base. When I say home base, I am talking about this upward sloping 100-day moving average, and it is also a bit far away from the 200-day moving average, which happens to be this red line that you guys can see over here. These moving averages, guys, tend to act like a magnet. They tend to draw price in. So when you guys see any given stock too far away to the upside from these two moving averages, we could be expecting some sort of pullback sooner rather than later. But other than that, guys, take a look. We also can see over here an ascending or an upward sloping 20-day moving average, upward sloping 5-day moving average. And now here comes the problem. If Lilly happens to burst above 575 bucks, this stock is going to be in no man's land. A brand new all-time high. I think that Lilly has been making brand new all-time highs during the last, I don't know, like 10 trading sessions, with this weight loss optimism. And what's the limit for Lilly, guys, from a technical standpoint? I don't know. Is Lilly going up to 600 bucks? It is possible. Is Lilly going to 650 bucks? It is possible. In my case, and I had a member of my Patreon asking me today about Lilly, I told her, it was a woman, I told her, try to buy dips on Lilly, retracing down to its 5-day moving average. Take a look, guys, at how the 5-day moving average, so this white line that you guys can see over here, has been acting as support on 1, 2, 3, 4, 5, 6, 7, 8 occasions during the last, I don't know, 20 trading sessions. So that was my advice for that member of my Patreon. Wait for a retracement down to the 5-day moving average. And if you happen to confirm support, remember, guys, that any area of support is support after the fact. This is something that I have been telling you on multiple occasions. So don't buy the dip. Buy the dip, or sorry, buy strength after the dip. So let's say that Lilly retraces down to 560 bucks. Am I going to buy calls right at 560 bucks? No way, because I am not certain if, or I don't have any certainty if about that area being able to provide a good support. So what would I be doing? I wait for the retracement down to 560 bucks. Let's say that buyers step in, Lilly bounces back up, and I would be buying calls at around 561, 562 bucks, 562 bucks. So I'm gonna let others do the heavy lifting, and then I am going to be buying strength after the dip occurred. So nothing to say about Lilly. Great stock. From a valuation standpoint, guys, this stock is extremely overvalued, and the valuation is very crazy. But we don't trade based on valuations. We trade stocks based on technicals. This stock can easily keep going higher, and I don't know. People want to lose weight, guys, without hitting the gym. So what's the limit for Lilly, guys? I don't know. That's anyone's guess. I didn't take a look at the market structure of Lilly, by the way. Is it that maybe sellers are stepping in here? Let's take a look. And in the meantime, let me take a sip of 7-Up. Look, so the demand is stable. Good. Okay, this is a good signal. And the supply or sellers is starting to rise. Or we can say that sellers are starting to step in over here. But as of now, we have some sort of, this is a tie between buyers and sellers from a demand and supply standpoint. So I would be buying the dip here at around 560 bucks in the case of Lilly. Okay, SoFi. Let's go over SoFi. Okay. Well, I take a sip of 7 up. I haven't taken a look at SoFi in quite some time, guys. Let me see. There you go. It went up today 0.35%, and it closed the trading session at $8.57. So, very choppy chart over here. We still can see on the 4-hour chart an upward sloping 200-day moving average, and also an upward sloping 100 DMA, which happens to be positive. And if I zoom in, we have a verbal battle, guys, between these two moving averages. 5-day moving average, which happens to start, or which is starting to rise. Let's just put it that way. And the 5-day moving average is signaling as of now $8.72. So SoFi closed today's trading session below the 5-day moving average, but the bulls managed to close the trading session above the 20-day moving average. So this is an easy one, guys. I'm going to draw a line over here, right above or right at the 5-day moving average. If SoFi opens tomorrow's trading session above $8.70, and if it happens to consolidate above that level, we have a potential gap to the upside up to $9.50. $9. I'm going to draw another line over here. And check this out, guys. $9.50 happens to be a previous resistance back from early July, and also a previous resistance back from late June. If we were able to take this trade, guys, from, let's say, $8.80 up to $9.51, this would be an 8% profit trade. So this could be a possibility in the case of SoFi, and I wouldn't touch it below this 5-day moving average that is starting to rise at $8.70. Let me take a look at the market structure of SoFi. And by the way, guys, um, all of the analysis that I am carrying out over here in this live stream are subject to the general market conditions, obviously. If tomorrow the markets happen to be killed because the 10-year treasury yield is going higher, or because the DIX is going nuts and stuff like that, you guys know that most of the stocks are going to go lower. So in regular market conditions, the analysis that I am providing over here should be, for the most part, playing out. Okay, SoFi, let me see if we can see over here. SoFi, take a look, guys. This is a very compelling and very positive market structure. Remember, on top of the chart, you guys can see the demand, and at the bottom, you see the supply. The demand is skyrocketing, so buyers are starting to step in over here very clearly, and the supply is kind of rising, but way below the demand. So, and again, in regular market conditions, if SoFi opens the trading session above $8.70, and if the bulls can consolidate above that level, this could be a trading opportunity, in my opinion. Okay, I have another request. I have a bunch of requests over here. Let's go over Apple, good old Apple. Let me take a look at Apple. All righty. Goes down today yet again, 2.92%, and it closed the trading session at $177.55. The bulls managed to find support, guys, at an area in which they were supposed to find support. You guys know that we have had a tsunami of bad news on Apple from China, and apparently the new iPhone that they are going to be rolling out anytime soon is going to be more expensive relative to the older iPhones that they have rolled out in recent years. So are you guys willing to buy a brand new iPhone that is going to be more expensive relative to the ones that you have purchased before? Oh, sorry. Oh, let me know in the comments section. Okay, so 175 bucks. So they found support, guys, at a previous support back from August 24th, and this is also a previous resistance back from August 5th. Sorry, back from May 18th. My bad, May 18th. Okay, so this was an area in which they were supposed to find support at. If tomorrow Apple happens to go down once again, keep an eye on this level, guys. $176.30. If that support happens to be broken to the downside, we have another previous area of support around 172 bucks. This is a previous support back from August 18. To the upside, what do we have over here, guys? We have two important spots. So we have the convergence of this upward sloping 100-day moving average, this blue line that you guys can see over here, with this downward sloping 20-day moving average. So this is going to be a big area of supply for Apple. So this could be potentially a big area of resistance for Apple, 181 bucks. If the bulls of Apple can recapture 181 bucks and they can consolidate above that level, then they would have another task to the upside up to this 5-day moving average near 185 bucks. So this is going to be a very tactical trade tomorrow. Again, opening above 180 and closing candles above that level. We have a gap up to 185. And let's say, guys, and from a bearish perspective, that if the bulls failed at bursting above 180, or if they actually burst above 180 and afterwards they lose that level as support, this could very well be a short down to these two potential areas of support, 176, again potential areas of support, and if 176 happens to be broken to the downside, then we could see Apple maybe paying a visit down to 172 bucks. Over here, let me take a look at the market structure of Apple, guys. Do we have any significant change? I took a look at the market structure of Apple yesterday after hours, and it was looking very decent. But let me see what happened after yesterday's big drop. Let's see. And no, nothing crazy, guys. We still have a rise in demand that is above the supply. And I can make the case that this is the reason why the dip got bought up today, guys. We still have buyers over here willing to pay Apple at one, or willing to pay for Apple shares at 175, 180. So this is a good looking market, or let's say that Apple looks positive from a market structure standpoint. So and again, in regular market conditions, if the bulls can consolidate above 180 bucks, maybe we could see this another gap up to 185 bucks being filled. Okay, please, with COVID, RSV and flu season on the rise, plus Pfizer vaccinations for Lyme. This is the proof. Um, I don't know what happened with COVID-19 related stocks. Let me take a look at Pfizer. Let me see over here, Pfizer. Guys, do not touch this stock. This is unbelievable. This is a major downtrend. We can see, I mean, there got to be something very wrong going on with Pfizer, guys. So we have supposedly COVID-19 cases on the rise, and on top of and despite the fact that we are seeing some sort of quote unquote resurgence on COVID-19 cases, Pfizer is getting killed like this. And it, I'm having some issues with my microphone, and today Pfizer hit once again a brand new 52-week low. This is not positive, guys. I wouldn't try to guess the bottom over here. We have a downward sloping 200-day moving average, downward sloping 100-day moving average, downward sloping 20-day moving average, downward sloping 5-day moving average. This is trash, guys. This is garbage. Garbage. Just stay away from Pfizer. If any of you wants to buy the dip here, damn it, guys, I have some issue here with my microphone. Sorry about that. Okay. If any of you is interested in, let's say, buying the dip on Pfizer, again, let others do the heavy lifting. So wait for buyers to step in and at least recapture one important moving average. So maybe I could take a look at Pfizer bursting above 37 bucks. And by the way, what happened with other COVID-19 related stocks? Let me take a look at Moderna. Let me see over here. Moderna. Take a look. I mean, it pretty much closed flat today, 0.10%. Guys, the markets are not buying this COVID-19 resurgence bullshit. Clearly, the net aggregate opinion of the markets is telling us, I don't care about COVID. I do not care about COVID. And why? Well, because Moderna is looking awful, major downtrend, and below all the moving averages, or most of them. At least the bulls closed the trend session below above the 20-day moving average. But this is still a major downtrend. And Pfizer, another vaccine maker, made today a brand new 52-week low. So the net aggregate opinion of the market is very clear. Fuck COVID, guys. I'm not buying this bullshit. So don't expect making a ton of money buying COVID-19 related stocks, because the markets, as of now, this could change maybe later on. I don't know, this week, next week. I don't know, during the fall. But as of now, on September 7th of 2023, the markets don't believe that COVID is going to be a major issue that we need to consider. So you also need to know how to interpret the message that the technical charts send us, guys. Okay, this is every technical chart, guys, tells you or tells us what the net aggregate opinion of the markets is in regard to any given company. So don't worry about COVID. And if I were you, I wouldn't be wearing a face mask either. But let's don't get political during the live stream, okay? Okay, Tessie. Let's take a look at Tessie. And we are how long in, guys? 31 minutes in. You won't believe it. I have been streaming since 9 a.m. Okay, nonstop, nonstop. Okay, and once I'm done with this live stream, I gotta go live once again, guys, for the guys of my patrons. So I cannot. I mean, I should do like 45 minutes with you guys today, because I mean it's been a long day. Okay, Tessie, let's go ahead and take a look at Tessie. Goes down today 0.17%, and it closed the trading session at $251.49. Let me take a sip here of 7-Up. Okay, and what do we have here? Um, so we have an upward sloping. I mean, we have a flat, actually, not upward sloping, a flat 200-day moving average. We have an upward sloping 100-day moving average, and the bulls close. Let me zoom in here. The bulls closed the trading session today right below this 5-day moving average, $252. So I am going to draw a line over here. I use a lot, guys, the 5-day moving average, like a lot. Okay. You guys know that Brian Shannon is my main influence from a technical standpoint, and he uses a lot the 5-day moving average. And this moving average has made me earn a lot of money, and this moving average has, let's say, prevented me from losing a ton of money. So I use it a lot. Okay, check this out, guys. This, let's say, rising 5-day moving average happens to coincide with a previous support back from early August, also a previous support back from late July, previous support back from late June, and also a previous resistance back from early June. So a very important level. So the stock of this company, guys, has stopped right at $252 on multiple occasions. So this level has acted as resistance and support as well on many occasions. Very important area. That implies that that price, $252, is extremely important for the markets. So now that I have that message from the markets, 252, it is very important. If 252 happens to act tomorrow as support, so if I happen to see Tessie tomorrow, we say Tessie, I mean, we also say that in our Discord chat. So if Tesla happens to consolidate above $252, we have two potential gaps to the upside. The first one, $263. This is a previous resistance back from August 31st. And then we would even have another gap to the upside up to $271, which is a previous resistance back from This is July 27th. So let's say that we grab some shares of Tesla or some calls at 253 bucks. Remember, after we confirm that buyers are outnumbering sellers at that level, let's say that we grab some calls or shares at 253 bucks, up to 263 bucks. This would be a 3% profit trade. And up to the other gap that I just told you guys about, 270, this would be a 6% profit trade. Very important spot for Tessie. On the flip side, what about a short over here? Let's say that Tesla opens above 252 bucks, but the bulls aren't able to hold that area as support. And if this break this 5-day moving average to the downside, then this could be a short, no problem, down to this 20-day moving average near $239 in the case of Tesla. Let me take a look at the market structure of Tesla over here. Let me see. There you go. Tesla Motors. Okay, so what is the supply and the demand looking like? And take a look, guys. Very good looking market structure for Tesla. The demand is through the roof, as you guys can see over here, and the supply is a bit above average. When I say average, guys, I'm talking about this dotted line that you guys can see over here. So the supply is starting to rise. It is a bit above average, but the demand is way above the supply. So I'm thinking, and again, in regular market conditions, if the bulls of Tesla can hold 252 bucks, Tesla could be having an appointment with higher prices. No problem, bro. Anytime. Okay. We have Microsoft, Mr. Softy. Let's go ahead and take a look at Mr. Softy, Microsoft. Okay. Goes down today 0.89%, and it closed the trade session at $329.81. By the way, guys, and this has nothing to do with the shorts. This is some sort of macro bullshit. Be careful with the stocks of companies that have a lot of exposure to China, because the Chinese are not being very friendly with US companies lately. So obviously we always have to trade the shorts in front of us, but you have to keep in mind that if you're trading, as I just said, the stocks of American companies that have exposure to China, at any given moment we can have any bad news that could, let's say, put downwards pressure over these kind of stocks. I'm talking about Microsoft. I'm talking about McDonald's. I'm talking about Tessie. I'm talking about Apple. Needless to say, Microsoft. I'm talking about what else? What other stock? What other American stock or American company has a lot of exposure to China? I mean, I don't know. So many stocks that are, doing stuff in China. So that is something that you need to take into account, mostly if you like to take swing trades. Okay, maybe you say, okay, you know what? I'm gonna start a swing trade on Microsoft. You never know. Maybe some sort of bad news come out and your trade is gonna be wrong just because the stock fell off a cliff based on a Chinese or a China-related news. So that is something to keep in mind, right? Okay, in the case of Microsoft, we have an upward sloping 200-day moving average, upward sloping 100-day moving average. The bulls already captured the 20-day moving average, and they managed to close the trading session today right at the 5-day moving average, guys, right over there at $329. And I'm going to draw a line over here. So I'm thinking that if the bulls can consolidate, and again, in regular market conditions, above $329.50, 330 bucks, so slightly above this upward sloping 5-day moving average, we could be seeing Microsoft going higher up to 334, which happens to be a previous resistance back from August 23rd. And if the bulls go up on good volume and momentum,